This is going to be Russ Colvin. He's presenting two different ground up self-storage development deals. The first one he'll present is Tucson, Arizona, and then he also has a new one, which I only found out about a few days ago, in Bakersfield, California. Russ,
Good morning.
there you are. How are you? Good morning.
Very good. Very good.
Good. Good. So
Thanks
give
for
me
having us today.
absolutely.
As Jimmy said, my name is Russ Colvin. I'm CEO and president of Your Space America. We are a national self-storage investment and development firm. I'd like today to talk to you a little bit about us, about the self-storage industry and why it is the best and safest commercial real estate investment in the country. And as Jimmy said, talk to you about our projects in Tucson and Bakersfield. I have been in the commercial real estate industry for about 40 years, about half of that time on the lending side and about half on the investment side, and for the last 13 years, exclusively on self-storage. Let's see, next slide. Disclosure, everybody should read the disclosure materials. Next slide. This first slide speaks to the growth of the self-storage industry and in America, and it shows the growth basically from the 80s through 2023, and it's consistent, solid growth with more and more people using self-storage, and more often also we see businesses using self-storage. And I would venture to guess that a good number of people on this call today probably have a self-storage unit as well. Next slide. The self-storage industry, again, is growing. About 17% of the properties are owned by the public REITs and about 29 by the largest owners. And then the rest are essentially individual types of owners. But that makes for a lot of opportunities within the industry. And I'm sure all of you are familiar with companies like Public Storage, Extra Space, U-Haul, CubeSmart, and we actually use some of them to manage our projects. Next slide. This is one of the interesting things about self-storage and why it is the top performing commercial real estate asset class and why it has been for 3 decades. When your tenant leaves a self-storage unit, you basically sweep out the unit and you're ready for the next tenant. And unlike so many other types of commercial real estate, you don't have tenant improvements, you don't have leasing commissions, you don't have downtime. Clean out the unit, the next tenant goes in. Low CapEx expenses, higher margins generally than other types of projects, inflation protection in that the leases are month to month so you can raise rents. Diversified rent roll, that's one of the really interesting things about self-storage. If you have a facility, for example, like the ones we do, maybe you have 1,000 tenants. Okay, that's pretty diversified. Also low delinquency rates among tenants because you have the ability to shut them out of their units. And that speaks to the landlord-friendly legal framework. Everybody's probably heard about storage wars, right? You don't pay your rent and you get locked out of your unit. Next slide. Self-storage predominantly is a product type that people from about 30 to 70 use. About half of the tenants stay for less than a year, generally half stay for longer. And businesses, and increasingly, self-storage is a business where if somebody wants to rent a unit, they can go online and rent a unit and literally go to the facility. They have an access code, they can go to their unit. Makes it very, very simple to rent a storage unit. Next slide. This is an interesting bit of information about self-storage, REIT sector fundamentals, and how self-storage has performed over the last 3 decades compared to all the other commercial real estate product types. Next slide. So over the last 31 years, from 1994 through 2024, on average, self-storage has outperformed every type of commercial real estate. Next slide. This deck here, I think, speaks to that, shows the other product types from industrial to office to multifamily to healthcare, lodging, and then there's self-storage over on the right, the top performer. Next slide. Another good factor about self-storage is that it performs well during difficult times. So during the pandemic era, it was the top performing product type by far, as you can see from this graph here. Also during the Great Recession, it was the top performing product type. While many types of real estate had high delinquency rates and foreclosures, self-storage had very low delinquency rates. Next slide. This is a really interesting slide, and this basically speaks to delinquency rates during the pandemic era, beginning of 2020 through May of 2022. And you can see how delinquency rates spiked at the beginning of the pandemic and then slowly started coming back down again. But down here at the bottom, you see this green graph, and that is self-storage, and that's how self-storage performed during the pandemic. Again, the lowest delinquency rate of any kind of commercial real estate, and extremely low during the pandemic, which tells you that it performs through all seasons. Next slide. This next slide is the project in Tucson, Arizona. It will be managed by Public Storage. As you can see, a very attractive project, state-of-the-art Generation 5 climate-controlled facility, which will also have state-of-the-art security. About 2/3 of the people that use self-storage, decide to use self-storage, are women, and they want a clean facility. They want one that's secure, that's well lit, that's climate controlled, and we offer all of that. Next slide. Another rendering of this Tucson property. Next slide. Once again, another rendering. Very, very attractive facility. It will be the premier facility in this market. One of the really good things about developing in this market, the kind of product we're developing, is that most of the product is much older, on average about 30 years old. Most of it is not climate controlled. So again, we'll have the premier facility in the market. And of course, in Tucson, Arizona, it gets quite warm. So hence the need for climate control. Next slide. This project will be a 966 unit facility. We expect all of our approvals over the next 60 days, and we'll have a Q4 groundbreaking. It's going to be about a 129,800 square foot facility. And once again, a state-of-the-art facility and the premier facility in the market. This really interesting thing about this property, which I'll show you in a couple more slides, but it is literally located on the on-ramp to an interstate highway. And I tell people this is the first self-storage facility I've ever developed where it was located on the entrance to an interstate highway. So you have about 90,000 vehicles per day, and this property will be right there. Across the freeway is one of the most successful retail centers in the state of Arizona, about 1.2 million square foot power retail center that has Home Depot and a major assortment of credit tenants. Again, one of the top centers in the state. And so this building will be about 40 feet high. So from across the freeway at the shopping center or on the interstate, you will not be able to miss this property. Next slide. Again, this project is sort of in the heart of the Tucson trade area. It will be a major qualitative addition to the market. In that, as I say, it'll be the premier facility in the market. Next slide. Uh, As I mentioned, most of the competition in this market is older product, average about 30 years old. About 70% of them do not have climate control, so that will give us a major competitive advantage. There's currently an undersupply in the market, and even after the current projects in the pipeline are built within the 5 mile radius, there will still be an undersupply. Next slide. This slide sort of speaks to the rates in the market, very solid self-storage rates. And I think this project won't have any problem commanding solid rates within the market. Next slide. Again, an overview of the rates. And of course, having the top facility in the market gives you some pricing advantages as well. But for climate control self-storage in this market, given that it's in limited supply, it does give you an advantage in the market. Next slide. This next slide really shows you what I was talking about. You can see the highway here over in the bottom right. You see our property on the right, and across the freeway, you have all these retail tenants. Really a beautiful center that draws, tens of thousands of people every week, and which will help make our project very, visible within the market. And again, here's a few more slides here. But as you can see, the on-ramp in the upper left, in the on-ramp to the freeway, and there is our property. It says subject 3 acres. Next slide. As I mentioned, this project is located along an interstate highway, approximately 90,000 vehicles per day. Again, will be difficult to miss. Everyone in this area will be familiar with this project. And when people in this area think about self-storage, they're likely to think about this property. Next market. Next slide, rather. One of the interesting things about the Tucson area, and this is something we look for in all of the projects we do, we want projects in markets that have a good story, where there's solid population growth and where solid population growth is expected to continue, where it's a positive business climate, and where you have a lot of drivers for occupancy. And some interesting things about Tucson, a lot of major universities within Tucson. It is also the headquarters for Army intelligence, and there's growing use for that. And it also is probably the top manufacturing hub in the world for parts for satellites, which, of course, we use widely in our country. So a very strong market. Next slide. This next slide is our site plan. As you can see, once again, Interstate 19 and the on-ramp there, and there's our property. It's going to just a fabulous location. Next slide. This slide is some elevations of the property, and it just shows you some more elevations in terms of how it will look when it's constructed. But again, will be a beautiful project, the nicest one in the market. And that concludes the Tucson discussion. So now we'll go on to the next one, which is in Bakersfield. This next project is in Bakersfield, California. And interestingly, finding projects in California is extremely difficult to find good projects. It is not an easy place to get things approved. And not a lot of areas are zoned properly, but this project recently got permission, conditional use permit for self-storage. Bakersfield is located in Central California, 9th largest city in California, strong demographics. It's a growing market. they expect that over the next 30 years that this area of California, the Central California area, will grow by about 5 million people. I don't think there's other places in the country that expect that during that time period. And again, this property is located on Chester Avenue, which is a major thoroughfare, nearly 15,000 vehicles per day. So it has all, it checks all the boxes, has all the right ingredients. And this again is a market where most of the competition is older, non-climate control, which will give us an advantage. Of course, Bakersfield, like Tucson, it gets very warm there. So we think again, not only will have the premier facility, but we'll have an advantage because of climate control. Next slide. Uh, Next slide. These are some views of the elevations. Again, as is the case with all the projects we do, very attractive elevations, very attractive project. Next slide. Some more elevations. Now, an interesting fact is people will sometimes say, well, you guys, build a very nice product. Why do you go the extra mile in terms of making sure that it has all the right ingredients in terms of how they're developed and so forth? Well, the reality is that in any kind of real estate, it doesn't matter if it's residential, commercial, or whatever, you have to think about if you own something for a certain period of time, when are you going to sell it? What is your market going to be? And in the case of self-storage, you have a lot of buyers, institutional type of buyers, and having a top facility, premier facility in a market that has all of the right features is very attractive to buyers. So not only does it make it attractive to buyers, but it makes it attractive to buyers at the right prices that you'd want to sell it for, which is the ultimate objective, obviously, right, is to maximize returns for our investors. Okay. As I mentioned, this property will be the premier facility in the market. Bakersfield is the 9th largest city in California and growing. It's a 1.71 acre site, about 90,000 people in the 3 mile and about 229,000 people in the 5 mile. The building will be about 107,800 square feet. Going to have about 813 units. And again, it's climate control, state-of-the-art security. Anyway, next slide. This project, the total project costs are about 16.2 million. We're raising about 5.68 million. We're going to have debt of about 10.5 million. And over the 10-year hold for the opportunity zone, we're projecting a 22.8 IRR and a 6.78 multiple. And again, you probably won't see those kind of returns over a 10-year period on a lot of commercial real estate. Next slide. So this speaks again to the age of the supply, existing supply, and the demand for self-storage. And there are no other developments in the pipeline in the immediate market, which is a positive, again, because it's not an easy place to get things done. Next slide, rather. This next slide shows you that they're getting solid rates for climate control self-storage, which of course is something we look at very carefully. It's an important factor, but again, our property should have a distinct advantage in terms of getting top of the market rents. Next slide. Again, solid population in the market in the 3 mile, 5 mile, and 1 mile radius, which is where most of your clients come from. And of course, being on a major thoroughfare like Chester and having a building, that's going to be 40 feet high, it won't be missed in the marketplace, and it will certainly, as I say, be the nicest facility in the market, and that in and of itself will attract a lot of tenants. Next slide. As you can see on the map here, our project is in the red circle. It's near Highway 99, so it's centrally located within the Bakersfield market. Next slide. As I mentioned, the project is located, sort of at the heart of the city, surrounded by a lot of residential, a lot of commercial, significant retail, and also, of course, as I mentioned, on a major thoroughfare. So a great location, great market, all of those things. And that concludes the Bakersfield presentation. Next slide. Another thing that I would like to talk about is that I talk to a lot of investors who say to me, "Oh, I've invested in this project, but I don't really know what's going on." Well, you won't have that problem with us. Some things we do, we're very transparent. If we have a project under development, you can literally go online and there are photos added to the website every day for the property that show the progress in the construction. So you can go online and see what's happening at the project. In addition to that, we send out weekly reports of what's happening at the project. So you will literally feel like you're on the ground with our projects. We feel like the more communication, the better. I call it over communication, and I think that's a great thing. I'd rather be giving somebody too much communication than not enough. And one thing I learned from having been around for a while is during the Great Recession, investors were concerned about their projects. And I found the best way to address investor concerns is to over communicate, to give them more information than they want. Then they don't worry about things. Everything's right there. Some other things that we do too, we use probably the top contractor in the United States in self-storage, Arco Murray. They do about $4 billion a year, and they're the top in self-storage. We usually always use excess liability insurance. So if there's ever an incident in a property, we're adequately insured. Although I've never had an incident at a property, we put security on every property so that while it's under the construction process, nobody's going to come on site and damage the property in any way. We do a weekly project management call with our contractor, followed by a written report. We keep close tabs on a project schedule. In short, we run a very tight ship in terms of how we oversee the projects and how we communicate. I feel that's critical. And what you end up getting there most of the time is you usually get projects that are on budget. I've never had one that was not on budget, that are on budget and ahead of schedule. But for example, we have one under construction right now in Las Vegas. It's supposed to be completed in February. It'll probably be completed in late December. But again, monitoring everything very carefully and working closely with our contractor. Next slide. As I mentioned, we use probably the top contractor in the United States. And once again, having been around for a while, I know the importance of only using the top people on our projects. So that is for construction, but also for management. I've used all of the publicly traded self-storage REITs. Right now, we're doing a lot with Public Storage, which I'm sure all of you have heard of Public Storage. They're traded on the New York Stock Exchange. They have over a $50 billion market cap. They own about 3,000 properties. They have probably the best third-party management program in the country. And so we're going to be having them manage property in Tucson. And again, another great thing about using the REITs for management is due to the fact that they're publicly traded companies, they tend to give you excessive information, okay? But once again, and these are put out on a monthly basis, so we can provide them to our investors on a monthly basis. But once again, I would rather be giving people too much information than not enough. Anyway, so that concludes our presentation for today. And I look forward to answering any questions people may have in the breakout. And I'd like to thank everybody for taking the time to listen to our presentation today. I know all of you are probably very busy, and I appreciate you being on here today. Thank you.
Yeah, thank you. We appreciate you for joining us today here, Russ. We've got about 5 minutes. We can take some questions here in the main session. You got a ton of questions, by the way. So if your question doesn't get answered here, please head on over to that breakout session. You don't know how to get there yet because I haven't shared the link yet. I'm going to share that link with everybody in just a moment, but it isn't quite open yet. My colleague Emily will be running that breakout session. When that breakout session concludes, come back into the main session here and rejoin us using the same link that you used to join earlier today. But first question for you, Russ, is from Rick. Rick wants to know, will you only be able to access the property via the highway on-ramp? And he asked that question fairly early on. It might pertain to the Tucson. I'm not sure though.
Oh, I mean, if he's speaking to Tucson, it's located within a shopping center. So you can come into the shopping center and go to the property. It's not, that's really the access. It's through the shopping center. But when I talk about the freeway on-ramp, what I'm talking about is the visibility for everybody in the area. You know, it's impossible to miss it. But the access is through the shopping center that it's located in.
Okay, good clarification there. Question from Brad, our friend Brad Malotsky. He wants to know, let's see, he says, Russ, can you review how many projects you all have developed and owned over the years? And what is the typical return to investors?
That's a great question. I'm always happy to answer it. People ask me, they say, well, have you ever had any properties that had a problem or didn't work out right or anything like that? Answer, no. I have done 21 self-storage projects in the last 13 years. Every one of them has been successful. At the project level, we have averaged about a 39 IRR. And so I would say overall, you know, very successful. And that's not by accident. That's basically by adhering to all the things we talked about today, doing things the right way. And that's the result.
Perfect. And then we've got a question from Ashley I want to get to because Ashley's not going to be able to join you in the breakout session because he's one of my panelists coming up here for our Ask the OZ Experts session in a few minutes. Ashley wants to know, what are the anticipated returns? I think you may have shared those already, but he wants to review those again.
Somehow the return slide didn't make it into Bakersfield, but the Bakersfield returns are very similar to the Tucson returns. You know, over the 10-year period, about 22, 23%, and about a 6 multiple, which is great returns. And if you have more questions about that, we can do a detailed breakout for you based on the amount you plan to invest and what it looks like every year during the 10-year. We also plan to refinance as well, probably about 2 years in, and return capital to investors. One of the great things about self-storage is that when a project is completed, and I've seen this virtually on every project I've done, that when a project is completed, you have significant value creation, so that enables you to refinance and return some capital to investors. Because in op zones, you know, some people may have taxes to pay and other things. So that's important.
Excellent. Thanks, Russ. We're not going to be able to get to all the questions. I know I had someone was asking about maybe partnering with you on a building in Sioux Falls, South Dakota. There was another question about somebody who wants to partner with you on a parking opportunity, parking management in Bakersfield, maybe a JV. Maybe those two can join Russ's breakout session. You can talk more about that in there. I will get to this one last question from Karen. Karen says that she has invested in your Owens project already, Russ, because it offered a return in 2026.
Hello, Karen.
Yeah, there you go. She liked that it offered a return in 26 when the OZ capital gains come due. based on the House proposal. Does Tucson offer that same return, or are we getting a little bit too close to that deferral date? Maybe you can speak to that issue for a moment.
No, you know, well, it'd be about 27. So, but we could look at that with council and see, you know, how that ties in terms of the returns for Tucson and the dates and everything. Anyway, I'd be curious if our Owens investor likes the cluster and all that thing that we do for communication. But anyway,
Very good. Well,
thank
we
you.
are, yeah, thanks, Karen, for coming and asking that question. Russ is going to move to his breakout session right now. Russ, I've emailed you a link to that breakout session. It's also included in the Zoom
Okay.
chat right here. So whichever way is easier for you to join, Russ, I'll let you take off and join right now.
Okay, thank you.